Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 18th, 2012. Lots to talk about, so let's get started. All right, so in the previous video, I talked about being super close to stopping out. And when I say close, I mean pennies close to stopping out. But before I get into my normal chart analysis that most of you have already seen me do, so you pretty much know what I'm going to talk about already, I want to just kind of talk about the actual pattern that's happening now. And with that being said, let's get started. All right, so this is a chart of the SPY, which is the ETF that tracks the S&P 500. And as you can see, we don't have the normal lines on my chart. I'm going to get that into that a little later. Right now, I just want to kind of take a look at the pattern, okay? Sometimes I like to do this when the patterns aren't playing out as I expected it to or I would have hoped to. And hope, I really don't like to use the word hope simply because it's one of the human emotions that we should really not be using because human emotion will definitely get you in trouble. Well, in my opinion, it will definitely get you in trouble, and that's how you'll eventually lose money. We, as technical analysis or as chartists, we need to look at the chart and we need to make a technical decision on whether to buy, sell, or to sell or buy or whatever the case may be. And we need to make money. If we do things based on emotion, then that's gambling. I mean, gambling is something that I try to stay away from as much as possible. A lot of people, like your sister, your brother, or whoever, who are not traders, think the stock markets are gambling. But what they don't realize is that their 401k, if they have one, is the stock market, or you're investing in a hedge fund that's playing your money in the stock market. So, everybody's a gambler who has a 401k. It's automatic. I mean, you cross the street and you hope you don't get run over. That's gambling. So, it can be interpreted different ways. But before I get into that rant, let's take a look at the current pattern here. So, don't mind these lines here just yet, but what we basically have is we have this down move here, and then we're just going to do a recap of previous videos from over a month ago, and just kind of review what's going on. I mean, sometimes that's always the best thing, is to delete all your lines and to start from scratch and just to analyze and see what might be happening here. And again, this will be a video on the stock market, so I will not be talking about any stocks or anything like that. That'll be in a separate video, and that's if I can find any stocks. And right now, with the low volume and the way the volume is going, and you guys know how important volume is to me, and I'll get into that later. It's just been non-existent, okay? But here we go. So we have this this down move, and then we have this up move, and this is somewhat of a wedge type pattern, okay? So it wouldn't be a triangle, well, it wouldn't be a wedge type pattern. It'd be like a bear flag, but this bear flag is a little bit too big in my opinion, meaning it's just kind of an extended bear flag, and I don't know if it's due to the low volume or not. I mean, it's obvious that this part over here breaks this up down trend here. I mean, you see this, we have this pivot point here, and then we make another pivot, another pivot, another pivot, and so on and so forth. We have all these pivots within this channel, and then we don't have a pivot. You see how that works? We have this up move, and we kind of just float higher. So to me, that's obviously a volume issue, but the fact of the matter is, whether you have volume or not, if you can't make the trade, if you can't make a decision based on an accurate trade, a trade based on an accurate decision, then you'll lose money, and that's the bottom line. So this is what we're gonna do, or this is what I'm gonna do. I'm gonna quickly delete these lines here, and what we have here, I'm gonna switch to the weekly chart real quick. All right, taking a look at this weekly chart. Okay, so I've explained to you guys in the other videos on the weekly chart and how I'm viewing the weekly chart. And let's just take this out here. No, I can't do that. But anyways, we had this down move here, right? And then we started bearishly consolidating, just like that, right? So the last month or so, it basically, it definitely did not negate this pattern, but it just made this pattern a bit more on the scary side, okay? So we have this down move here, and then we have this up move here, and then we have this bear flag. But now this week, if you kind of look at it here, I can draw a line. Let's use this line here from the previous top, which is this candle here, okay? Actually, let me zoom in here. There we go, that's much better. Let me just get the top of that candle here, and I just draw a line straight across just like that. As you can see, we pretty much went right in there. Let's get the price of this candle here. The high is 142.21. The high of this candle is 142.30. So well, we didn't close, so the close of this candle is 142.18. So we're just pennies away from what in my opinion would be a negation of this bear pattern. Okay, and it's getting closer and closer, and I have to admit, I'm going to tell you right now, because of the low volume, this is definitely a possibility that this pattern gets negated. Now, any pattern that gets negated will have a strong move to the upside. Okay, so I mean, we may have a small pullback before it moves higher, but the move will be normally stronger to the upside or the opposite side of a failed pattern. Okay, so from that, this pattern here, all right, so we have this down move, and then we have this up move here. We have another pattern here, and that's basically this pattern here. Okay, so this pattern here is a screenshot of the SPX. All right, and this is basically the same thing. We have the down move here, and then we have this bearish consolidation pattern. As you can see on the SPX, we didn't quite make it to the top yet like we did on the SPY. In fact, you know what? Let me get this screen out of here. I can't undo that, so let me just move this out of the way, and let's just take a look at the SPX. Alright, this is the chart of the SPX, which is the actual S&P 500, and I normally don't do my analysis on the S&P 500 simply because there's no volume that I can look at. But again, this is really not a video on my normal standard. I'm just looking at purely the pattern here. Okay, so the reason why I took a screenshot of the SPX and this so-called bearish move, and I don't, I'll be honest with you right now, I don't think this is going to be considered a bearish consolidation or bear pattern or bear flag or whatever. I mean, this is literally a double top pattern. Okay, but let's just kind of, what I wanted to try and do is kind of look at to see where else would have a similar pattern where you would have some bearish consolidation or bear flag created but then failed, went into a double top, and possibly pulled back. Okay, let's take a look. So of course I took a screenshot of this, so when I look at history of other stocks or the SPY or different time frames, I can kind of get an idea of what I'm looking at. And then I did find a couple of places. Let me just show you that. Alright, just a quick review. This is the picture of the SPY and then its bearish pattern. So we have this down move here, and then we bearishly consolidated, but then the consolidation or the flag didn't necessarily fail, however went into a double top, or is currently now in a double top. Okay, so let's take a look at some history here. This is a daily chart of the SPY. Now the reason why I'm able to use daily charts, weekly charts, monthly charts, or hourly, or even the 10-minute charts is simply because a pattern is a pattern, and patterns work always on any time frame. It doesn't matter what time frame it does. Now, my mathematically calculated levels and all that makes a difference on different time frames. However, patterns are patterns, and they will always be a pattern, so any time frame, it doesn't matter. And that's what I like about patterns. But patterns, we can't just make a trade based on patterns alone. I just want to make that clear. But I just wanted to show you, based on this pattern, what could potentially happen. What we have here is another similar move here where we had this down move. All right, and let me just take these lines out over here. I just left these lines in because I just didn't want to forget the spot here. We had this similar thing where we had this down move after an up move here. Okay, so let me just move that picture back in here. We had this up move from here to here, and then we had a down move, and then we bearishly consolidated. Okay, so we'll just concentrate up to this line here. Let me just draw a little highlighter here. Nope, that won't work. Let me just get a pencil here. Okay, so from this day here up to here, we had this down move, and then we had this bearish pattern here. Okay, same thing here. We had this extended up move here, we had this down move, and now we have this bearish pattern. This bearish pattern actually played out on these 2 days here, but we won't pay attention to these because the pattern is still intact, because there's no confirmation after this breakdown. Okay, so now we, instead of coming down, after this bear pattern was made, we continued higher. So let me just draw the line even further, and we continued higher and higher and higher until we came almost close to a double top. In fact, this could be considered a double top here. We just didn't reach the top of this candle here, but it's a double top within this within this body. In fact, we probably just missed it by a few cents. After that happened, we came straight back down. Now, here's the thing. We have a bit of a tail on this candle. This could be considered a shooting star, but we didn't get volume on this. So, it is a possibility that what happened yesterday, there's no tail on what happened yesterday. So it's showing that a lot of um, uh, what is that called? The market is still within relative strength within itself, I guess you could call it. There's no reversal indication, in my opinion, other than a doji star of what happened yesterday. So let's look at. Well, okay, let me take a step back because I don't want to get into that right now. Okay, so sticking with the pattern, I know I rant a lot, so we had this down move, we had this bearish consolidation pattern. The pattern didn't look like it played out, but as soon as it went into a double top, we had a huge pullback here. Is that going to happen on the current pattern, which is what we see on the weekly? That remains to be seen, but that's just something I wanted to bring to your attention here, that the pattern is very similar to this pattern here. Okay, now let's move back a little bit over here, and we have something that's kind of similar as well. We have this up move here. Okay, we have this down move, and then now we bearishly consolidate, but it didn't happen immediately. It came pretty close to the top over here. It wasn't as close before pulling back down. Okay, so we have another pattern there. All right. So now I'm going to switch to the weekly chart of the SPY, which is the ETF that tracks the S&P 500. I know I sound like a broken record here, and then have this square drawing here. So let me just zoom in here. I think I took this for notes. Okay, there we go. Alright, sorry about that, guys. I had to pause the video because I had to find out why I had that pattern marked. Anyways, switch back to the daily chart of the SPY, and here's a pattern that's very, very similar to the actual pattern that we have now on the weekly chart of the SPY. And let me bring this this diagram back in here, and then just kind of erase this line. So we had this extended up move here. It was a little bit on the steeper side. We came down, we had a small pop, almost doing a double top before coming back down, and then we bearishly consolidated, and now we're almost into a double top. And this is the weekly chart again of the S&P 500. Now let's move this out of the way. We have something very similar here. We had this down move, right, and then we had this little pop on the top, which is this here, which would be this here. Well, I think I can leave both here on the screen. Let me just zoom out a little bit here. Okay, and then move this to the side. Alright, so we have this extended move up, which is what we have here, an extended move up, right? And then we hit the top, we come down, and then we have a small little bounce. We come down, we have a small little bounce. Okay, and then we come down again. Let me just get my marker, and then we come down again, all the way making a pivot there. And then we have the same thing here. We have this little pivot down here. All right, and then we have this somewhat of a bearish consolidation pattern, and then that's what we have here, this bearish consolidation pattern. Right, now same thing, this one did not drop as soon as I thought it would, or looking at the chart I would have thought it would have dropped a little earlier. Same thing, this is the current one. We didn't drop yet, we continued higher. Same as here, we continued higher, and this is pretty much close to a double top, such as this here. So if I just draw a line straight across, it's pretty close to a double top. Same here, I draw a line straight across, pretty close to a double top before pulling back. You see, that pattern is, now stock markets will never be 100% the same, you know what I mean? I'm sure there's a chart out there that's exactly the same as this chart here. I mean, after years and years and years of candle charting, I'm sure there's something similar. But there's a famous stock trader, I forget his name, but he said stocks aren't, the patterns aren't exactly the same, but they rhyme, something like that. I gotta look it up for you guys. But so as you can see, it's pretty close together. It looks pretty pretty good as far as this goes here. Okay. Alright, and most analysts out there who want to take your money makes everything look so pretty with the cherry on top and everything and whatnot. But I'm not one of those analysts, because I don't want your money. I want you to be able to take money from those institutions that pretty much destroyed our economy. Nah, I'm just kidding. But basically, I'm trying to help you guys. Well, if this is even any help, it could be more of entertainment for you. But for me, we have this up move over here, and then this is a very similar pattern. Okay, so let me just bring this chart back in here. We have this down move, same like here. We have this down move, and then we get a small little bounce. So we have this down move, we get this small little bounce, and then we come back down to make a pivot. We come down here to make a pivot, and then we start bearishly consolidating, right? And then we start bearishly consolidating. Now this one, if you look at this chart here, this was between 1997 and 1998. It did hit a double top here, and when it hit that double top, we got somewhat of a small pullback. Again, this is, if I didn't mention it earlier, this is a weekly chart of the SPY, okay? We had a small pullback, but it wasn't much of a pullback. In fact, we got a bounce right after this consolidation period here, so it was pretty, this is, uh, we, how should I say it? We found support here from this consolidation point here, and then we just bounced higher, and we didn't pull back for a very very long time. I mean, we didn't reach that level until the year of 2000. Okay, so it took some time before we hit that level again. So I just want to make it clear to you guys that these, even though we hit a double top, we got a small pullback, it doesn't mean we're going to get a huge down move like we did, like we saw in the other patterns we saw. I mean, this pattern doesn't look as good as the other patterns that I just recently showed you, but this is definitely a rhyme, meaning it's pretty much the same, almost the same. If it looks the same, smells the same, then it might be the same, and that's something that we just have to be cautious about. Again, I want to give you the good and the bad, and then let you make the decision on whether the market's going to, continue higher or lower. Okay. But the simple fact of the matter is, this just consolidated. Okay, I mean, when we went up after this pivot point. We just consolidated, and then we broke higher, consolidated again, and then broke higher, and then so on and so forth. Okay, so that's just something that you want to keep in mind, that this double top, even though it held, it didn't hold for very long. So if we do get a pullback on the double top on the weekly here, okay, if we do actually get a pullback, like next week or something, let me just delete these lines, just like that. If we do actually get a double top from here and we pull back, just keep in mind that there is a possibility that the pullback may not be for very long before we head higher. Okay, so that's just the fact of the matter, that again, we can't control what the stock market's going to do. We need to use charts and let the stock market and understand what the stock market's doing. And when I say stock market, I mean the general population of traders, because that's who makes the stock market. And most of these traders, or most of these trades, are made by institutions, not by retail traders. So we have to see what they're going to do, and we use charts to find out what the next step might be. Okay, so now I'm into 17 minutes here. So I'm going to tell you now, you can pretty much stop this video if you don't want to watch anything more, because it's already into 17 minutes. You guys, if you guys are people that always watch my videos, then you probably already know what I'm going to say, because I'm just going to go into my standard analysis from here. Alright, so let me load my drawings in here. Okay, so just like I talked in the previous video, this was such a close call. I mean, the high of this candle here was 142.16. The close of this candle here was 142.18. It's just a 2 cents difference. I'm very, very, very unbelievably close to stopping out. Okay, we are into let's see, a double top here, perfect double top here. But again, I don't know if we're gonna get a pullback until I see some volume in the market. I mean, look at this volume. Okay, let me switch to the weekly and show you what the volume was. Right, this is the weekly chart of SPY, and then look at the volume. The volume for this week was 455 million. Okay, for the week. Okay, there's no other volume. Let me just grab one of my tools here. Let's get a price level. What tool should I use here? Price level. Draw a line straight across. This is going to be a perfect straight line here. And the next volume we see here was on December of last year, and we all know in December we have that what is that called, the Santa Claus rally. Everybody knows about the Santa Claus rally. Basically at the end of the year, we get super unbelievably low volume because everybody's taking vacation, going visiting their families and whatever. Hardly any traders in the market, and then you're going to see very low volume, and then normally you get a an inflationary rally in the beginning of the year called the Santa Claus rally. This rally was at 424. I'm sorry, not a rally, but this volume was for this week was 424 million. But other than that, we have these two here, which was back in 2010, right? Which was 363. But again, this was the end of the year. I mean, this is December. right? You see that? And then we have it again over here in December. I mean, it's common knowledge that we're going to have low volume during the month of December because everybody's on vacation. It's going to be low volume, and that's why we get the Santa Claus rally, right? Makes sense. Um, but for this week, I mean, it was just unbelievably low. 455 million for this week. For this week, it's just crazy. So what does that tell me? That tells me that this rally here, this candle here is an institutional head fake. Okay, I'm going to tell you guys right now, like I told you in previous videos, and I've proven it to you multiple times, that first of all, the way you can determine or find out head fakes or protect yourself from head fakes is to have confirmation, to make sure that you have another week. This is a weekly chart, so another candle that closes above the high of this candle to confirm, but we did not break out. We're still in a double top, so until we get another candle that breaks out of the double top, and then a candle after that that closes above the high of that candle that actually broke out, then you have a confirmation breakout, and then you can pretty much determine that the market's going to go even higher. Okay, we didn't get that yet. We're in a literally in a double top on the weekly and the daily, so that means that there's a possibility that we may have some sort of a slight pullback, and that's only if we can get volume back in the market. Let's switch back to the daily chart. Right, on the daily chart, we have this doji candle. In the previous video, I said, well, if we gap up, well, let me delete this and get my other tool here. If we gap up right into this mathematically calculated level here, because we still have this 142.78 level here, that it could possibly get to, definitely with this kind of low volume, and we create some kind of doji candle up here on higher volume, then I would probably add to my shorts at that time. But instead, what we did was we created this doji candle, right? On this, let me just get rid of this line over here, this red doji candle here, on volume that was not even 100 million. Okay, the volume is just unbelievably low. Okay, and we were up 19 cents on SPY. So low volume on a float higher tells me that eventually, if, okay, it is an if. Obviously, everything in the stock market is susceptible, has a chance of failing. Okay, but if we do drop, the drop will be dramatic, in my opinion. Okay, should be dramatic, in my opinion. But you just have to be cautious. And the way I would play this is, if we do get a drop, I'm gonna sell a portion of my shares. If it can get to the 20 moving average. Keep in mind that we do have a pivot point here, and that at that time we are falling. The 20 moving average comes into this pivot point here, and then I'll sell some of my shares at that point, and then put the other shares at a break-even stop in case it does go even lower. Now, if we close below this bottom trend line, then I think that we're going to come down pretty fast and furious. But if we get to this bottom trend line here, and then the 50 moving average comes back up there, then I'll probably go long the market at that time. But right now, this is just basically a float higher, because there's just no volume. I mean, look from this day when we started floating higher, and that's a day right after we get an actual. I mean, this candle was above average. Right, the very next day, volume is just non-existent this whole time here, and that starts from this candle here. This whole time here, there's just a float higher. You see how that works, right? You see how important volume is. So basically, this is just something to be aware of. We still have this 142.78 level up here, which basically means that there's a potential that we could reach this 142.78 before getting a pullback. We hit this 141.36 level. We had this pullback. We hit it once. We had the pullback, and again, after you hit one of my levels or any level once, I don't depend on it anymore. And sure enough, we break through the intraday of the 141.88 I showed you in the previous video. We actually got a bounce off this 141.88, and this is actually just a test level, meaning I wasn't really depending on this level. It's just something I'm watching to see how accurate it's going to be. It wasn't as accurate as I thought it would be until this day happened, and we got an intraday pullback. And then the next day we actually went down back into, let me just show you the 10-minute chart just to show you what the 141.88 level did, and which is pretty interesting here. Alright, so this 141.88, again, is a mathematically calculated level. It was a level that is in testing. I mean, we all know that this pink line, this 141.36, has been pretty accurate as of late. I mean, we went right into it, we pulled back, we broke through, we went right into this 141.88 level, we pulled back, we broke through, and then we retested the 141.88 level. Went up, came down, retested 141.88 level, went up, came back down, retested a 141.88 level, went up, came back down, started bouncing right on the 141.88 level, came back up, came back down, retested a 141.88 level. Is that amazing? I mean, you can look, I don't know how many videos ago I had this 141.88 level in here, came up, we didn't retest it, and we just started floating higher, went right into this upper trend line here, which you could see on the daily chart, and it had a small slight pullback on higher volume. But this is normal. Again, these higher volumes towards the end of the day, that's normal. You see that? I mean, that happens every single day. It's expected, okay? You see that? Every single day. All right? So, that's basically what I'm seeing now on the SPY as far as the intraday goes and the daily. All right, real quick, I'm going already into half an hour, but anyways, this is the chart of the UUP, which is the US dollar, and everybody knows the dollar is opposite of the market. UUP up, market down, dollar up, dollar down, market up, and so on and so forth. So we have this down move here. We are in this bearish consolidation pattern. Like I've been telling you guys in the previous videos, we actually hit these two moving averages here. We bounced off, we hit it again, right? And then now we pulled back, which is giving the market a prop higher. Now, if you look at the bigger picture, again, this is a bearish pattern. We have this down move here, or we're bearishly consolidating, and we could potentially break down. If we do break down on the dollar, then that means the markets are going to start rallying. If we can, keep your eye on this, because I do think the markets are overbought and not really overextended, but definitely in an overbought state. If somehow the dollar can close above these two moving averages and confirm above these two moving averages. In fact, let me just make this a little bit more clear. We have this level right here. If we can close above this level here, then I think the markets are going to start pulling back. And then we're going to have resistance here, obviously resistance here, obviously on the dollar, and then ultimately on the double top. I mean, if we can close above this line here, then I think the markets are going to be done for a long time, or there's going to be a sharp move down before we get a bounce higher. Okay, so that's pretty much it. I don't want to take up too much of your guys' time. I mean, I do appreciate you guys coming by to watch my videos. You know, thank you very much for doing that. It's what keeps me making these videos, and I hope you're getting something out of it. But anyways, God bless to you all. I'll come out with another video with stock picks if I can find any. God bless to you. Good luck, and I hope to see you in the next video.